running out of time.
The Bitcoin halving is finally over, and its effect was pretty muted on the day, but now really picking up steam. Why? And was this predictable beforehand? I think so, and I want to share how. Today we're going to look at some of the most important Bitcoin metrics, ranging from new people entering the space to potentially what is the most important metric of all. But we shouldn't get carried away. There's a lot of talk going on now about how this is the start of the new super cycle, how you should buy right now. Eye-watering price predictions are being made left and right, and not without reason. It's what's happened historically. Take that for what you will. It's what the maths say should happen. Also, take that for what you will. But I definitely feel like we have a tendency in this community to be overly exuberant. I hate to say it. I mean, I hope I'm not like saying anything too crazy to anyone right now, but I understand why. I really do. We all want it to happen. We all want to go to the moon and get rich off of magical internet money. We've seen it. Now we just want to create it. And I fully intended on making a video today that was going to be a bit negative, that was going to attempt to draw some realism into the space. And in preparation for this video, I thought I could do that. And then looking at what I had compiled, I realized I kind of disproved that narrative.
Bye.
Let's start by looking at some of the doubters or critics of Bitcoin's future potential growth and their arguments and how they don't really hold water. Not trying to send any hate, by the way. This is some interesting observations. Some of you don't seem to understand, so let me help you. This is retail FOMO. New weekly Twitter followers of Binance in 2017 seeing that mountainous peak. Same thing for Twitter followers of Coinbase. Flatlined ever since. The Ethereum price overlaid over these new followers, it's pretty clear they had a massive impact on the price. People talk about how search terms for Bitcoin halving is up. I mean, that's a super specific term. Of course, it was going to be generally the most important search term, Bitcoin. For example, Wikipedia page views, still flatlining. Google search terms for Bitcoin, they're up, but they're still not higher than they were this time last year. How on earth do I look at this and get bullish?
Are you dumb, stupid, or dumb? Huh?
Well, I'm about to show you how. What bearish narratives conveniently leave out here, and I actually think is hugely important, is that Bitcoin from the bottom in 2018 to the top in 2019 did a 343% roughly price increase without major search terms, without new followers entering the space. And guess what? Bitcoin only needs around 100% increase, so about a third of what it's already done to reach new all-time highs. Yes, there is an argument to be made that that growth right there was not organic. It was caused by a little-known Ponzi that raised billions known as Plus Token. The dates do coincide, but at the same time, it's a little bit more complicated than that. The founders have already sold lots of the coin they had, and the rest of it that remains is very, very risky because they are on the run from the authorities. We don't know if that coin is burnt. Was that a bullish event? We don't know, so it's not really worth talking about. But I'm not saying that new all-time highs are going to be easy for Bitcoin, but what I am saying is if growth like this was possible with no new blood, imagine what kind of growth would be possible with new people. Or a new Ponzi into the space. I'm joking, I don't really want that to happen. But even without them, Honey Badger don't care. It just got a whole lot easier for Bitcoin to move upwards now that the halving is finally complete. See, I told you I would turn that around. Let's look at another very important metric, possibly the most important. I only hesitate to say that it is the most important because I also think that BitMEX funding rates are another hugely important indicator. But this might even top that. May have guessed it already, it's Tether. The Tether market cap continues to climb. It exploded just a few weeks ago, around March 29th, from around 4.5 billion market cap to 6.3. March 31st. Why is that an important or significant date? Bitcoin was trading at just over $6,000 at the time. We know what happened next. Coincidence?
I think not.
I mean, it could be, but let's get an expert's opinion on it. Brian Quinlivan, marketing and social media director at cryptocurrency data provider Santiment, recently told Cointelegraph, most USDT isn't just being taken off exchanges to be stored in wallets or cashed out through a fiat-based platform like Coinbase. When people aren't using USDT, they most often put it in Bitcoin. And what's cool is the fact that this USDT percentage often fluctuates a few hours or days in advance of Bitcoin's price reacting to it. So monitoring this metric in advance can end up producing a tremendous advantage by catching a sudden fluctuation early enough. Never was this more apparent than October the 8th, 2018, a very dark time. Tether's market cap at that time, 2.8 billion, fell late October to 1.8 billion, a massive fall. This dump front-run the actual Bitcoin dump that occurred by almost a week. And would you look at that, an explosion of Tether recently, taking it from 6.3 billion to 8.7. That's almost a 40% increase. I don't know, someone's gonna tell me I'm wrong. Around a 40% increase in Tether's overall market cap. That is massive. I've got chills. Eventually, pretty soon, it is gonna overtake XRP permanently as the number 3 cryptocurrency by market cap. And the thing is, it might not even matter if that Tether is actually going to be used. Plenty of people are aware and have seen what's happened and are going to get bullish just because. And I'm not going to get into the argument of whether or not they're fully backed. In this example, it almost doesn't really matter. Bitcoin's going to react regardless.
You know, I've seen this done a couple of times on a couple of different videos, and I'm not quite sure this is real, and I just want to see what's up.
So it seems then, without question, this may be one of, if not the most important Bitcoin technical indicator there is. However, there's one big flaw. Tether did almost nothing to warn us of the near 50% dump in March. Thank you very much, Tether. Its market cap didn't really fluctuate at the time. There could be some insight gleaned from that though. Some of the best traders often say that you don't argue with the charts, you don't put your own narrative onto a chart, you take a look at the chart and observe what information it's giving you, and if the fact that the Tether market cap did not react even though there was a 50% dump, then maybe that's a sign that that dump was over exuberant, unjustified, and wrong.
How dare you?
Yeah, oversold, I think is the professional term I'm going for here. No indicator is completely infallible. Elsewhere in the news, pretty crazy times. President Trump is once again putting pressure on Jerome Powell and the Fed to do even more for the economy than they are doing. I think they're loving all this money, maybe even getting a little blinded by it. But the president would like the Fed to adopt a negative interest rate policy. This is where banks have to pay interest for holding cash reserves back to the Federal Reserve. Basically, the theory is it will encourage banks to loan money. I can imagine if this thing goes through, then Trump's not going to want to let it go.
We'll never let you go this time.
But it's not likely to be enacted. It is possible. It would be a good situation for all asset classes as cash becomes even less desirable than normal. So yes, this would be good for Bitcoin. But even if it doesn't happen, this would still be good for Bitcoin. I'll justify it. Watch. The current monetary policy is so unstable, so unpredictable, where policymakers are trying to dynamically adjust the rule of the system in order to meet whatever circumstances they think will help. Bitcoin, in stark contrast to that chaos, is known, where the rules don't change, where its economic policy is written in code and cannot be inflated and deflated at the behest of lawmakers. As Cameron Winklevoss put it, by investing in Bitcoin, you are facilitating a peaceful transfer of power from governments to the people. BSV, that is. BTC is a useless Ponzi scheme. BCH is a nice project with no future. Yeah, I hope one day we're finally going to get past this whole infighting and bickering in the cryptocurrency community. One day it's going to be respected by the masses, and this will be a nice little reminder of the past. Here's hoping, at least. Also in the news, Jack Dorsey is buying $10,000 worth of Bitcoin a week, exactly like I do, minus the per week part. It's been a long time since I actually shared this story, but when I first heard about Bitcoin in early 2017, I took out a loan to buy it. Now that is pretty dumb, and I don't recommend anyone do that. I did take out the loan with enough time to pay it back. Should Bitcoin fall to zero, I could still afford to pay off the loan. Still very stupid. Bitcoin was around $1,000 at the time. I still don't think I've paid off that loan though. I should do that. But yeah, you probably don't need me to tell you why it's kind of a big deal that a huge tech guy is buying Bitcoin. And I know this is a few days old news, but I didn't get to cover it. Some interesting memes in the block messages found around the moment of the halving. Some of the miners said, "Happy halving, hello world, we are coming, we love you forever, Epstein didn't kill himself, and the Fed, last time below 10K. Hey, it is. Huh? I hope COVID will end soon and the world will be a better place." Oh, that was surprisingly wholesome. But history being made to the actual final message contained in the block that was the last block before the halving. New York Times, and a date just like Satoshi did with his first block, with $2.3 trillion injection, Fed's plan far exceeds 2008 rescue, basically writing it in stone in indelible code that we've never needed Bitcoin more than we do now. Here's to many more Bitcoin halving celebrations. And finally, a short story. Cointelegraph's Bitcoin halving party, with some divisive characters in the cryptocurrency community, got cancelled before it got started. It's a funny short story. It is very annoying for YouTube content creators right now. YouTube are trying to tackle those scam live streams that are everywhere and not really knowing how to define between legitimate and scam. Or can they? All right, back to some Bitcoin technical analysis now. So if we have a look at here, this is the important shifting goalpost moving average that Bitcoin needs to maintain a price above. However,